Hello, everyone. Welcome to Stony Brook University Weeks of Welcome, SBU WOW workshop series. We're one of the workshops, and we are going to talk about blockchain and cryptocurrencies. So my name is Danling Jiang. I'm a professor of finance. I'm also the co-director of the Blockchain Business Lab in the College of Business. So today, we're going to actually I have a survey to make. I'm going to try to figure out how to do the survey. Okay, then I will do a presentation on blockchain and crypto basics. Then my colleague, Dr. Xiao, who is the director of the Blockchain Business Lab, is going to talk to you about our initiatives in the lab and potential opportunities to join our research team. Then we will have a panel discussion joining by two SBU. One is alumnus and another is a current undergraduate student to discuss the things they learned and the research they're doing related to blockchains. Finally, we're going to open up the floor for your questions. So we're going to do a new Q&A session. So during our conversation, feel free to enter your questions in the chat box so that we can answer those questions at the end. Okay. So I'm going to start with the poll. Okay. Just to know your literacy in the blockchain space. So my first question I just launched is, have you heard about the blockchain technology? Okay, so far are some, okay, I'm gonna share with you the poll results. Okay, so currently we have about 18 students and majority of you have heard about it. So let's wait until we got all the response, okay? Okay, so I and poll share the results. We have 75% of you have heard about blockchain, at least learned about it in the past. We have 20% who are new to the field. Okay, so my next question is about Bitcoin. The question is, do you have any Bitcoin? So I don't need to know how much you have. I just want to know whether you have any exposure to Bitcoin. Okay. So let's wait until everybody made their choice so that we can share the results. So my colleague, Dr. Xiao, is going to help me to admit additional students along the way. So anybody who wants to participate, final call. Okay, so we have 30% of students have some kind of Bitcoin, maybe $1, right, or 20. And we have 70% of you who have not get any exposure. So no comments, right? I'm not saying anything good or bad. I just want to know the state of the literacy. Okay, so let's go to the third question. Do you have any Ethereum? Okay, Ethereum is another cryptocurrency. Let's see whether it's more popular or less popular among us relative to Bitcoin in terms of exposure. Okay, so I'm going to share the results. We have 40% of you have Ethereum, which is actually higher than Bitcoin exposure. And then we have 60% of you who have not had any exposure. So I'm going to share the results. Okay, so my last question. Okay, so it's about crypto investment. Do you plan to invest in the cryptocurrency? The first choice, you have invested, will continue holding the assets. Number 1, 2 is you have not invested, but you do plan to do it in the near future. The third one, you're not sure, and I actually can't see all the choices, but you could see that from your end. Okay, so anyone who wants to make selection and final call. Okay, so here we go. I'm going to share the results. So the results is 40% of you have invested, will continue the exposure. 28% of you have not invested, but I can't see the answer. Maybe plan to do it in the future. And 6% I'm not interested. 28% is uncertain, right? If I could recall that right. So I'm gonna share the results. Okay. So you have seen all of that. I'm gonna stop sharing and go to my presentation. So it looks like 1/3 of us already had some exposure. So 2/3 of you are new to the space. So you're coming to the right place too as a beginner, right? So before I go to crypto and blockchain, I'm gonna quickly introduce the research and volunteer opportunities in our lab and in our center. So we have the Blockchain Business Lab, which is a space, virtual space for faculty student teams to work with blockchain businesses to develop ideas related to business applications of blockchain technology. And the lab is housed within the Center of Entrepreneurial Finance in the College of Business, which is the platform to connect the business, connects faculty student teams with entrepreneurs and businesses. So we have a lot of projects going on every semester. Anyone on campus is welcome to join as a volunteer researcher. And I do provide, here you go, on the chat box, you can see our website, you can see the link for you to sign up as a research assistant in the center or in the lab. Lastly, I want to share with you that we have built a community-based network, which is a website to start with, to share various information and resources on events and career opportunities on investing, blockchain, cryptocurrency, startups, etc. And you can go to the website, sign up for our free newsletter, or if you want your email we can get from the events, we will send you some newsletter samples and you can continue the subscription or you can unsubscribe, okay? So that's my free advertisement. Let me go to the talk, okay? So if you don't know blockchain, blockchain is a technology, it's a decentralized and distributed ledger, and it links blocks with the cryptographic hashing function, and it allows a very secure transaction from peer to peer, right? And cryptocurrency is a major application on the blockchain technology. Sometimes we call cryptocurrencies the digital assets. And typically cryptocurrencies behind it, there is a decentralized autonomous organization, basically a computer algorithm runs the organization, which enables peer-to-peer transaction and various application of the blockchain and cryptocurrencies, okay? So blockchain allows for secure and also very cheap and very fast, near instant transactions around the globe, okay? So let me give you a little bit more idea what is decentralized and distributed ledger, right? So you can see that from here, this is the typical way we transact in today's economy, which has a central point, right? If you're using your Facebook, and Facebook company is the central point that controls all the record, right? So every time we communicate with another user on Facebook, we have to go through the central server of Facebook in order to get to the other end. And sometimes maybe the central point or central server has multiple copies so that they can avoid one single point failure. And that's called the decentralized network, right? However, when we move to blockchain technology or blockchain space, we no longer have a central server or central servers. Instead, everyone, every person, every user on the node, right? they can be hosting their server, and the server has many, many copies, so that they can verify each other's transaction. So even one single point is failed, and it doesn't matter because you can still get to the other user using alternative routes. Okay, so it's much more secure, it's much more decentralized, and it allows for multiple copies in order to avoid being hacked, right? So blockchain is the distributed public ledger, and this so allows us to move from a centralized transaction mode to decentralized and distributed transaction mode. And in blockchain, we can conduct peer-to-peer transactions. The transactions will be grouped into blocks. The blocks will be added to the public ledger. Many computers in the world would hold a copy of the ledger. So it's many duplicates of the ledgers. And each block will contain reference to the previous block. So if anyone wants to alter the previous transaction, they won't be able to add it to the existing block because the authentication will fail, right? And the history of the ledger is known by anyone who can download who can be a full node, and you can download to verify. And the ledger is public. And also initially blockchain technology is built based on proof of work, right? So anyone who wants to be one node to run and verify the transaction, they have to put in a lot of investments in their computer hash power and to solve a very complicated mathematical problem in order to prove their work, in order to win the rights to record the transaction. Nowadays, because of environmental concern, because of the requirement for speed in transaction, some of the blockchain are now built on proof of stake. So proof of stake allows crypto holders who have bigger stake have a better odds to verify a transaction in order to earn the transaction cost, right? Transaction fee. And the blockchain technology was actually Bitcoin is the first application of the blockchain technology, which was invented in Halloween, actually night of 2008 by Satoshi Nakamoto. And this is a pseudonym. So far we don't know whether Satoshi is a person or is a team of people. They have been very private, so but they introduced this beautiful technology to the world, and Bitcoin is becoming the global private monetary network, right? And on blockchain technology, many other cryptocurrencies, and also I'm going to talk about NFTs are built, and the space has transformed tremendously in the last 10 years. It has grown exponentially every year, right? Even every month. Some other applications that has been used or being tested beyond cryptocurrency on blockchain includes, for instance, you can use blockchain to conduct logistics in transportation, tracking the flows of products, and also you can streamline your financial transactions. Many recent very famous chain, you can build smart contract, which allow various transactions taking on blockchain. Also, we can secure record keeping, and we can tokenize a lot of real assets. So here, just quickly, on Sunday, I downloaded the data, look at the market for cryptocurrency. And now if you go to coinmarketcap.com or many other website that list the prices of the cryptocurrency, you can see thousands of them, right? Many have died and many new come. You can see 1,003, even 8,000 of them are different cryptocurrency. But let's focus on the most important ones, right? As of last Sunday, the total market capitalization, because the cryptocurrency are traded 24/7, so you can get their prices and market capitalization anytime. So the most recent market capitalization is over $2 trillion, with Bitcoin, which is BTC as a symbol ticker, accounts for 43% of the total market cap. And Ethereum, which is ranked number 2, has a market cap that accounts for 20% of the total, followed by ADA, which is Cardano, another blockchain, and BNB, which is Binance. Binance has a blockchain and also has an exchange, and followed by USDT, which is a stable coin, and SRP, which is a medium of exchange. So you can see that in academic research in finance, at least we have 6-7 types of different cryptocurrency. Bitcoin is considered as a store of value, international monetary network. Ripple is considered to be a meeting exchange because it's speed and low transaction fee. And then we have distributed computational token, which is the blockchains allows for smart contract. And then we have 3 of them ranking at the very top. And we also have a fast growing stablecoin markets. The famous one includes Tether, USDT, and USD stablecoin, which is issued by Circle, collaborated with Coinbase. We also have other tokens. Some tokens are utility. You can use them to exchange goods and services. Some tokens are security because they represent ownership of the underlying financial assets. So you can see the space is really changing every day. You have to learn really fast to keep up with it. But here I want to focus on Bitcoin because this is the first first application when the technology was first introduced in 2008. So here, Bitcoin is considered to be a new monetary network. So I want to go back to the definition of money. If you are not from economics or finance, and this might be very important to understand. So money is defined in 3 ways. So as money, it has to satisfy 3 criteria. Number 1, money has to be a store of value. It allows you to store your savings to reserve its purchasing power over time for those savings. Otherwise, it's not money. And also money has to have units of account. So it has to give a way to keep track of the value of assets and services. So basically you can, the money in Bitcoin is 1 Bitcoin, or it's, I'm going to talk about million Bitcoin or Satoshi. And so those, or if you talk about dollars, and you have to have dollars and cents and as units of account. Lastly, money has to serve as medium of exchange. So it's not perishable, it's durable, it's portable, and you can use money conveniently to exchange goods and services without the need to barter, right? So a traditional definition, money has to satisfy the 3 criteria. And let's look at the history of money, and in the thousands of years of humankind history, we initially had commodity money, right? That's gold and silver, or even further it's Xiao, right, in some places. And later on, we moved to a representative money, which is the bank notes on commodity money deposited in private so-called banks. Later on, we moved to the gold standard. We're starting from World War II. After World War II, US and other countries have come together, decided to government nationalize the depository service for commodity money and issue government notes to represent the underlying gold and silver. So that's the gold standard. And later on, because all governments cannot arbitrarily cannot use 100% of backing of their bank notes, because they tend to issue more notes than the underlying gold and silver in the vault, they started to move to the gold convertibility standard, right? So under gold convertibility standard, and the gold and silver are not 100% relative to the bank notes. So only a fraction of banknotes can be converted to gold and silver instantly. Lastly, around 1971 to 1972, and US actually was together with other even other countries, even before US, and US started to convert to fiat money system, right? Fiat money system is our current system that we have the dollar bill, we have the currency issued by the government, but there's no backing or conversion to commodity money, right? So the purchasing power is derived from the legal tender laws, and the government actually can issue as much as currency based on their various goals without backing all of them with commodity money, right? They don't even need to worry about the conversion. And lastly, which is now in the last 10 years, because of the rise of Bitcoin, with a new system starts to emerge. That's the private digital currency monetary network, which is part of the cryptocurrencies. And also starting from last year, central government have got into the race for CBDC, which is the central bank depository currency, and China and Russia are some of the earlier pioneer of using CBDC. In China, CBDC has been put in use in their market, and US is starting to design and their own US dollar CBDC. So as you can see that we are really in a really unique time, that the fiat monetary system is being challenged or replaced by two new different systems. One is the private money, and the other is the central bank digital currency, right? So if you're holding fiat money, it's not really money, because fiat currency doesn't satisfy all the requirement to be a sound money, right? Why? Because the risk of inflation in fiat money, if you look at the US dollars, which is already the best, currency that holds its value over the last century. But if you look at the purchasing power of the US dollars, back in 1913, if we index the purchasing power of a dollar bill to be 1,000, then if you look at this year in May, that 1,000, index of 1,000 has dropped to 31.7, which means that there is a decline of 97% of the purchasing power of a dollar bill in the last 100 years, right? Therefore, you don't want to put your savings in US dollar bill, and you have to put in some other investments to hedge your long-term inflation risk. Otherwise, you end up with less and less value in your hands. This is where Bitcoin comes in as a value, which is Bitcoin proposed is, let's have a digital private monetary network, allows instant transaction, and also the supply is fixed so that no one can arbitrarily increase the supply, depreciate your Bitcoin value, right? And the units accounts, right, of Bitcoin. So we're going to argue that Bitcoin is a type of money because it satisfies the three criteria, right? First of all, it's a store of value, because if the monetary network is built, suppose people put trust in the monetary network, and no one can arbitrarily increase the supply because there's no more than 21 million Bitcoin can ever be existent or mined, right? And so far, 18.8 million Bitcoin has been mined. There's 2.2 left, 2.2 million left. Also, Bitcoin can be an immediate exchange, because you can send Bitcoin to anyone in the world with a cell phone and exchange for goods and services, okay? Also, Bitcoin has units account, because you can either send people 1 Bitcoin, or 1 Bitcoin can be divided into 1 million units. And with the smallest units, 100 millions of Bitcoin is called Satoshi or sats. 1,000th of a Bitcoin is a million Bitcoin, right? So it has units of count. It doesn't matter what big or small goods and services you buy, you can come up with accurate valuation. As I mentioned, so this is the chart for Bitcoin supply over time. And this is what has been mined. Mined meaning that people have to put in the proof of work in order to be given the rights to generate the block to record transactions. So as reward, miners or whoever keep the transaction record, the ledger will be rewarded Bitcoin, number of Bitcoin. So today we're getting closer to that cap, but it takes very, very long time to really reach the cap. Probably it won't, right? It won't even 50 years from now, okay? And Bitcoin price has been a roller coaster ride because it's a new technology. It's more like a startup initially. So you start with like a cent per coin many 10, 12 years ago. And over time, it has the boom and bust, but it never died so far. And you can see that right now, each Bitcoin is about today, maybe around $45,000 a coin. Again, you can do Satoshi, which is 100 millionths of a Bitcoin. But that's already like 1/3 down from the all-time high. Here, I want to share with a comment from a book by a podcast host, Eric Thompson. In his book, he said, you know, on the Halloween night, 2009, that's when the financial crisis took place in 2008 to 2009. And actually, Satoshi put up the Bitcoin white paper and quietly announcing this event. But he said, my prediction is that the invention of digital distributed ledger and double spend proof digital cash will eventually change the world in profound way. And by profound, I mean on the scale of the internet or the personal computer, right? So it's very important technology. So I'm gonna speed up a little bit given my time constraint here. So Bitcoin and crypto assets, they are now considered the new asset class by everybody, by many people, because the innovation is they replace the trust on the institution or on individuals with trust in math and algorithm, right? Once the algorithm is deployed to the blockchain, and no single person or single party can change it, right? So if you trust the code, and you can trust the transaction, right? And the opportunities is tremendous because it helps protect wealth, it helps to make transaction, it helps to verify the system integrity. Of course, as a new asset class, there is tremendous risk as well, right? You heard about regulations talking about how to regulate crypto assets and technology innovation. Some other technology may potentially bring threat to this particular technology. We also have market risk because the new market is full of speculation, volatility, and also we have custodian risk because Bitcoin, you really don't need the custodian and your coin will be in your wallet. So if you don't how to operate your wallet's hacked, or you lost your key to your wallet and you lost your Bitcoin, right? So there's a lot of learning. So as young people, you guys are in a much better place to learn this new technology relative to more senior investors. And after the pandemic, actually there's many challenges and especially opportunities that have presented to crypto investing. The main reason is the Fed in combat with the pandemic damage to the economy has nearly doubled its balance sheet, basically printed a lot of money, right? So people were concerned about inflation risk in the long terms. As a result, everything that serves as store of value from stocks and gold and residential real estate and Bitcoin will surge multiple folds, right? Stock has been up by over 100%, right? Real estate, everybody knows around you, right? People are fighting to get a piece of property. and Bitcoin has increased by nearly, I think, 5-fold since the same time last year, right? And financial assets have become more correlated. And also people want to diversify their cash and bond holdings by having a hedge of inflation, which can be gold or Bitcoin and other stuff. And also in crypto markets, you can actually get yield. If you hold a stable coin, you lend out your stable coin. Now, we can earn several percent, if not 10, it could be 3, 5, 8% of annual yield relative to nearly 0% from your bank, right? So this is the space with accelerated pace of innovation and a lot of opportunity. So lastly, I'm gonna bring this up because maybe some of our panelists are gonna talk about this. In addition to cryptocurrency, the blockchain allows for, some blockchain allow for smart contract, which is more like an internet vending machine of financial services or other services, right? Two most important applications as smart contract includes the DeFi, right? Decentralized finance, which is the financial services that taken place on blockchains such as the decentralized exchange. You can swap your token with the machines, with the blockchain, and without knowing who's on the other side. You can borrow and lend your tokens on the internet protocols, so without worrying about who's the other guy that's borrowing your token, right? So everything is in code. If you satisfy the requirement, the code, you will get that outcome, right? The second major application of smart contract is non-fungible tokens. Each token, non-fungible means they're unique, right? So they're unique token that represent some unique assets. For instance, they could represent a digital art or a crypto cat, right? And it could represent a game, video game items or gears or a role. It can also represent some digital record, a real estate property, like I heard Larry was talking about, he's doing this for like his watch, right? Unique piece of watch. Every one of them has an NFT. So there's a tremendous opportunity here in NFT and DeFi, and that's really the two brightest spots in 2021. So I'm gonna summarize because we need to go to the other presentation. And in summary, blockchain is a revolutionary technology. It's gonna has profoundly reshaped how people transact in the world, and they're likely to stay. And cryptocurrency is the first application, and there's a lot of innovation in the space, and central government wants their piece of share. So there's other opportunities too. And so don't ignore this opportunity because you may find your career here, you may find your investment and your fund here. Okay, so now I'm gonna turn the stage to Dr. Xiao for a quick presentation. Then we're gonna do the panel discussion. So Dr. Xiao, are you there? Okay, do you want to share screen or you just want to talk about it?
Yeah, I have a screen to share. Thank you, Danling. I will do that right now. All right, so I'll get started. Hello, everyone. So I'm Andrew Xiao. I am a co-director of the Blockchain Business Lab, and I would like to take this workshop hosted by Danling to discuss a little bit about the Blockchain Business Lab, what we are doing, and what can you do with us as a students. You probably you have seen a lot of lab research centers in the college business or in the Stony Brook University. So we are one of the Blockchain Business Lab is one of the research-oriented lab housed within the Center of Entrepreneurial Finance in the college business. So I have summarized the three major missions of us. So first of all, our mission is to promote blockchain-related research. But we as a research lab in the college business, we're gonna focus on business problems, like the investment problems, like the any data analysis problems with consideration of the transaction data with say Bitcoin or any cryptocurrencies, something like that. And also we want to promote blockchain related industrial projects with the help of our industry partners. Some of them are our alumni, some of them are our local business owners, right? So those industrial projects may initiated by them. Right? So we also want to help them to complete these type of projects. And also a very important mission of us is that we want to get our Stony Brook University students to involved in blockchain technique, well, through those projects, right? As you know that a blockchain and cryptocurrency, these are new concepts, new industry. So everything here could be something that we have never heard of, and something that you created could be a high chance to be new in the world. So we trying to bring the opportunities, resources, and the people who have this interest share the same interest together in this lab. So I have, so this is our team, right? So basically our team is led by me, myself, and Dr. Danling Jiang, and also with help of some other faculty members in the college business, like Dr. Richard Chan and Dr. Aaron Kim, and also with your help. We have here, I have a list of 4 representative students, previous students, like Mitchell, Asim, Zoe, and Tony. We have many of the students working with us as a RA, and I can summarize a little bit the highlights. I can highlight some of the achievements that we have achieved in the past 2 years. So in terms of the students' projects since 2020, we have initialized about six projects involving data collection, data analysis, website building, and more. So most of them were mainly completed by students with the guidance of me and Professor Danling Jiang. And our faculty members are also very active in research, given a broad range of expertise in investments, quantitative finance, data science, and more. We also publish academia research articles in top tier journals and the conference proceedings. Right. So if you're interested in doing some academic research, writing papers, you may simply search our names. We have listed our publications in our web page. You will see probably not just the blockchain related topics. You will see what else we do. And also something that I would like to highlight is that our blockchain business lab serves as a Stony Brook contact point for a collaborative project with the New York State Department of Financial Services. The major goal of this project is to promote the cryptocurrency related business in New York State. Well, as the New York State is already doing this for, has already been doing this for years, but they found that they want to build a more standardized and structured industry to help New York State residents to get into this business. Right, so we are working closely with them. And here I want to share the a web page that was built with the help of our previous students, Mitchell and Sim, and also some other students. So in here we have summarized some important information about the bid license application process for New York State residents. They want to start a business related to cryptocurrency. And also we have included some educational resources if you want to start learning what the concepts or about the Bitcoin or cryptocurrencies. We're keeping updating this website. And also, this is a event that has been that was a last semester. Dr. Jiang participated as a keynote speaker at the SUNY New York State and the DFS Fintech Innovation Series. Right, so this is a part of the project, the collaborative project between the SUNY and New York State Department of Financial Services, trying to promote this area that people understand what's new and what can be done in this area. So that's about a quick presentation about what we do and who are we. So if you want to contact us for research opportunities, or you have any thoughts that you want our help in terms of research or other projects, you can contact us through the email, and also you can see more information about us through the web page. So I would like to turn this back to Professor Jiang, and we can have more discussion with our panel discussion.
Right. Okay. So let's move to panel discussion. Let's invite Mitchell Poloov, our SBU alum business to 2020, who is an analyst at Datalot now, and also Evan King, who's the senior student at AMS, to join the panel. Right. So I'm going to ask them several questions related to their experiences and research that's ongoing, and they will share their thoughts. Okay, so my first question is, why don't you introduce your background and how did you get interested in the space? Let's start with Mitchell.
Hey everybody. So I am, as Professor Jiang mentioned, a former Stony Brook student. I graduated in December 2020 with a degree in business. I also did research at the BBL and with the Center of Entrepreneurial Finance. I was with the CEF, I think, for about 1.5 years, and with the BBL for about half a year or so. Right now, I work as a full-time data analyst at Datalot, and I just always kind of knew that I wanted to go into an analytical kind of role. It was either financial analyst or data analyst, and this is the path that I ended up taking.
Okay, how about Evan? Your background and how did you get interested in crypto and blockchain?
Yeah, thanks. Hi, everybody. My name is Evan Kim, and I really got interested in, well, for a long time, like I've known what Ethereum and Bitcoin are, but for many years I was a hater, and I finally had kind of changed my my perspective on things and did a complete 180 turnaround in May after my last semester, and I've just been learning and growing and kind of seeing everything going along with the space ever since then.
Okay, sounds great. Let's move to the next one. So Mitchell and Evan, please share with us the most exciting space you think in the blockchain space, and what kind of skills do you think one should acquire or yourself are acquiring to contribute to the space? Mitchell?
Sure. So I do want to lead this with, I work for essentially a lead generation company for insurance. So we don't really do much with blockchain, but I think there definitely is potential there. I think just because it is like a very new technology, it hasn't really been implemented yet in insurance on like a large scale. But in terms of verifying like customer transactions, I think it could be valuable, and dealing with automation of like payments and whatnot for specific insurance policies. But with regards to important skills in the space, I would say one of the big things is ability just to program, or even be able to read like programming, since blockchain technology is kind of built off of that. So even if you aren't necessarily proficient in a specific programming languages, if you're able to read and understand it, I think that's a really valuable asset.
Evan?
I'll kind of go off of what Mitch said and kind of generalize it a little slightly more, in that he's right in saying that you don't feel like you need to take a bunch of programming classes to want to be able to do something. Just some level, being able to have a conversation, I think, should be the benchmark. You know, having a conversation with another programmer, and even if you don't understand anything, being able to ask the right questions so that you can understand, I think, is a key point. And also, I would say the most interested things right now in the space for me are, well, it was decentralized finance earlier in this summer, but I've me along with a lot of other people in the crypto world have kind of been taken away by NFTs lately. And so for me, I think the most exciting thing to see is how NFTs and gaming will evolve in the next 12 months, and how I guess the play to earn system, where you no longer pay to play a game, but you play a game and the game rewards you in a monetary token value for your time, is going to change the world, I think.
Right. And we have seen some tremendous growth, right, in certain companies that become $1 billion in a matter of weeks, right? So Mitchell, so next question we have is, do you see any job or career opportunities that students can have by somehow learn about the space or get their foot into the space, or anything you can tell at this point?
Yeah, in terms of blockchain, I think one of the bigger things is like specific developing for blockchain. I think there are blockchain developers as a role is becoming more of a prominent thing. We're specifically focused on like building things like decentralized applications. So I think that is a potential career opportunity. Anything really involving kind of like an analytical role, I think would be useful in general. Machine learning is obviously also like a big thing in the past, like I think 5-10 years, even more. If you have skills for rolling that, I think you really have a lot of doors that you can go through.
Evan?
So I'll be a little bit more unconventional in what kind of jobs I see in the space and kind of their qualifications for being able to be successful. And I'll kind of use an example of what I've been seeing lately, especially in the NFT world, where people with, you know, you don't really, you don't have anything special. You're not working a technical job. You certainly aren't connected, or you haven't like networked successfully. Like, you're just a normal person. And there is not a single place where I have seen more people become millionaires from buying NFTs for like $100 and selling them for $100,000, $200,000, and just like changing their lives in a matter of months. I've never seen, I honestly didn't even think that was possible, but just the amount of, I guess, newly minted millionaires coming from the crypto NFT space, I think is something that everyone should be paying attention to, especially looking for like potential jobs. And what that kind of says to me is that you don't need to know necessarily what your role is going to be if you want to work in the crypto industry. You just have to be curious and open-minded and willing to, do your due diligence and you'll kind of figure out where you fall into the industry, because a lot of
be informed investor.
Yeah, being informed, being able to inform yourself of what might be good and what might not be a good investment, but just to be, I think those are kind of the more core skills, and then you can build whatever you need to around those.
Mm-hmm. Right. Yeah. So indeed, a lot of opportunities, and don't feel like you have to be a computer scientist to contribute. I can tell you a lot of news reporters, they got more jobs in crypto space than in traditional world. Why? Because we need so many people to educate the mass. And we need also business people, right? We need attorney and we need lawyers, and anyone that's essential to the traditional business will be demanded even more in the new space, right? Because you can imagine the regulatory or the governance or any thing that's function that's demanded in the space. So I feel like anybody can contribute as long as you have some skills that's useful for the traditional business, and that skill will be useful by and large in the crypto space. You just need a little bit background. You keep learning and reading, right, and hearing and watching, and you can learn quite a lot. Okay, so anyone can submit your question about chat. We have one more question with the panel, and then we will go to the audience question. So the last question is, do you work on any blockchain?
Well, hold on, let me check one more time.
Do you work on any blockchain?
Room 120, I mean.
Yeah, any project. And if you are, are you looking for any team members, any volunteer who can join you and maybe learn from you? And I know Mitchell you're not working on, right? I'll move to Evan. So I know Evan is working on a bunch of projects. Evan.
Yeah, so currently one of the projects I'm focused on is kind of making the on-chain data for blockchains more accessible, so that, everything technically is open and transparent, but who cares if you don't really understand what's going on? And so I'm kind of working on creating more transparency around that, so you can see like what the NFT trading volume is in a certain project, or how much revenue a DeFi protocol is making every year, and what that means to potential investors. And there's I guess anybody who's interested, definitely feel free to reach out to me, even just to like get some more information, and we can have more chats offline about kind of like what the specifics are, what's going on. But for the most part, right now, I am just I do a lot of SQL queries, and it's been kind of a learning experience because I started with no SQL programming skills a month ago, and now I feel like I'm kind of like, at the top, because it's just such a fast growing field, and I definitely feel like a veteran, but there's still a lot more to learn. And so just anything, if you guys are interested in understanding more about different parts of the blockchain, definitely reach out to me and we can talk more about those things.
Right. So if you're interested in joining any like research project, again, we have posted under the chat box, there is student volunteer application. So you follow the link and enter your information. So we have bi-weekly meetings in the lab and in the center with a bunch of students and faculty, and you can join and talk to other students and maybe work with them on a certain project. So that's great. So let's move to questions from the audience. I see one question here from Xiao. He asked, or she asked, do you see big companies like Brookfield or BlackRock adopting crypto blockchain as an asset? I actually don't know Brookfield, but I know BlackRock. I think they do. They have started like a fund, crypto fund, just for high net worth investor. And the same thing for Fidelity and BlackRock. It's ironical, yes, which is BlackRock is actually the largest shareholder of MicroStrategy. If you don't know MicroStrategy, which is the first public traded company in the US who put Bitcoin into their balance sheet, the entire balance sheet, not 1%, the entire balance sheet. They put all the cash in balance sheet and they borrowed money through debt issuance and put that also to Bitcoin. So they have the balance sheet Bitcoin strategy. Essentially, they're an indirect Bitcoin ETF. I remember, if I'm correct, BlackRock is the largest shareholder of that company. So the institutional adoption of cryptocurrency has been trending since last August. That's why you see Bitcoin price has increased by multiple folds. Just individual alone is not enough to boost the price. It has to be big money coming over time. And the catalyst in the second half of the year for Bitcoin prices is likely to be this new credit card and debit card using Bitcoin as rewards. So nowadays you can actually, I'm on the waiting list to get a credit card that gives Bitcoin as rewards. They don't have enough space. So, but if that becomes more popular among credit card users, and there will be constant cash flow into the space as a buy side, right? Okay, so the second question, and do you guys want to add anything, Evan or Mitchell, about big firms or major companies?
I guess I'll add one little point is there's this company called Grayscale, and they have kind of like a trust fund where you as a like a non-crypto native investor, you can simply give them money and they'll give you an equivalent amount of shares of Bitcoin in their trust. And so it allows for much smaller asset management companies, not on this, that only have maybe like 10 or $50 billion to put in a good amount of money as an initial investment. And as of 2021, that Grayscale Bitcoin Trust holds about 650,000 Bitcoins at this time. So it's definitely not a small amount.
Right. So Grayscale has increased by 10-folds in the last year in terms of asset under management. And you can buy those like a single stock, over the counter traded single stock, but the trust represents underlying Bitcoin or Ethereum, whatever digital assets, right? So the second question I have is, Arbars is concerned cryptocurrency market is so volatile. What's your thought? Mitchell?
Yeah,
What do we do with the volatility?
So I'd say yes, in general, cryptocurrency is pretty volatile, especially when you compare it to like normal stocks. I will say it is dependent on the specific crypto. Obviously, some cryptocurrencies like Ethereum would be much more volatile than others. So it varies. And this is also piggybacking off the last question. Because it is volatile, I think larger companies are more hesitant to kind of step into it, but I think they are little by little. And from what I've seen, at least, it looks like the concept of blockchain and cryptocurrencies just in general had been gaining more confidence by the general public every year. So I would not be surprised if 5 to 10 years from now, it was much more common.
So Evan.
I think to kind of rephrase the question, the cryptocurrency market has historically been a highly volatile market. That's kind of true with any new emerging technology. You're going to have a lot of figuring out where it belongs. But will cryptocurrency continue to be a highly volatile market in the future, and especially, even today? And I think the answer is not really. There's a big push from Circle, which owns USDC, a big stable coin on the crypto net, which is a cryptocurrency that is pegged to the US dollar. So USDC will always have a value of $1, and you're guaranteed that because it's backed up by a real US dollar somewhere. And Circle is actually pushing to be recognized as a federal reserve bank, and they've kind of submitted, they recently published that they've submitted, they're going to go through the process, and that would allow them to scale up so that you could have potentially hundreds of billions of dollars of the USDC stablecoin in the cryptocurrency market, as opposed to just the maybe like 25 to 50 billion scale that you see today. And so the bigger adoption of stablecoins will allow people to weather the volatility or choose not to participate in volatility if they don't want to.
Right, right. I just want to remind everybody what we're talking about here is not personalized financial advice. We're not financial advisor. So if you want to invest in space at your risk, be mindful. And we are over time, but I want to take a couple more minutes here to answer the last question. If you are constrained by your time, you need to leave, but in the audience, feel free to do so. So we'll answer one more question, then conclude. So the last question I saw from, actually two more questions. One is, let me go to Brian first. He said, we talk about government regulation as a threat to private blockchain, given government is working on their cryptocurrency. How would the successful implication of the CBDC affect the industry as it stands today? Great question. Anyone who wants to take the step?
I'll start it off. So I'm going to assume that that Brian's question refers to the US government and how they are working on adopting or implementing their own central bank digital currency. And I'll point out that China has already done so, and they've done so successfully, and they've been testing it out. And China is, like 5 to 10 years ahead of the US in terms of all things digital payments. And so for implementing digital central bank digital currencies today in the US, I think that it's something that the US government is lagging very far behind. And so that's why companies like Circle have to kind of do what the public governments can't, and just kind of fill the void, because there is a very big growing demand. There's a huge asymmetry of information between what is actually going on and what people think is going on. For example, see the legislation bill that got passed through that for the infrastructure bill that taxes crypto. And it's clear that the Congress people have no idea what they're talking about, which is not really a surprise. But I think that it's a good thing that these kinds of dialogues are now finally happening, and they should continue to happen so that all of the issues can be kind of talked about and in the open, so that we know the best route going forward for things.
So Dr. Xiao, do you have anything to add?
Yeah, I think that's just very good thoughts about the implementation of CBDC. I think the main thing, in my opinion, is that whether we consider Bitcoin or cryptocurrency as a currency or investment entity, that's totally different things. So I think if we consider, if more and more people consider a cryptocurrency as a currency, then the regulation may jump in because that's something sensitive. And we have a lot of theories talking about we cannot have two different currencies. That's the bad money drives good money out of circulation, right? And also this kind of inefficiency if we eventually have two active currencies. But in terms of the investments, that's I think more that will have less issue, and I think more companies or business may focus on that part. For the currency part, I think a private company has to Well, my guess is that someday they have to work with the central bank or government to think of way to address those conflicts.
Yeah, so I would imagine we may go to the world with coexistence of CBDC and private monetary network. The reason is it's too big a market and too big a source of tax revenue for the government to shut it down, because it represents tax revenue, represent jobs, innovation. So I feel like once the market gets too big, it's too difficult and nearly impossible to turn it off. So that's my thought, but anything can happen, right? Maybe technology advances will make blockchain technology obsolete. I don't know, but I
Yeah.
feel at this point, it's an emerging market with a lot of opportunities, and we hope everybody would take a look and don't ignore it, because you may be paying a big price by doing that. And that's all for today. And thank you very much for joining the session. We'll make the recording available for students who cannot make it. I'll stop recording.